Pinnacle Investment actually reported after the bell yesterday, showing revenue up 66% in the 6 months to the end of December. Profit was down, but still beating Macquarie's forecast there. Pinnacle maintaining its interim dividend of 29 cents a share. Macquarie also noting that increased funds under management and the acquisition of all remaining shares of Pacific Asset Management. And it's expecting the acquisition will be immediately accretive and rates Pinnacle outperform with a $25.25 target price. That is a significant move from where we are. Henry, would you concur with that or not?
Well, I'd like to, I have to say, Andrew, because I'm long Pinnacle in my super fund. So I'd like to. I bought it after the April catastrophe, if you like, last year when we had the Liberation Day drawdown, and it did well. It bounced quite nicely after that, but I failed miserably to take advantage of that. I actually believed the research from the likes of, let's face it, fantasy land. But I'm continuing to hold this one. I still like this one. I think it's a good business model. I like the PAM acquisition. That's the remaining 79.2%. These guys invest in fund managers. They're sort of a fund of funds. And, you know, I don't see anything wrong with these guys. They're smart guys. The guy that runs it, Ian Malone, has done a very good job. And I see nothing wrong with this. For me, it's a hold. As I say, I do hold it in my self-managed super fund, and I have no intention of selling it. But if by some miracle it got to $24 again, I'd be exiting stage left, pursued by a bear.
Okay, that's a good picture. Andrew, what are your thoughts? You know, particularly what we're seeing in the investment management space at the moment as well.
It's a visual that no one needs, Andrew. That's the first thing that came to mind. I quite like Pinnacle as well. We use a number of their managers that they have in their suite. Plato immediately comes to mind. Henry and I have spoken a little bit about PGA One of late, but you know they've got Antipodes, Hyperion, Metrics. So there's a number of well-known managers in there. Probably the key thing we got to think about with this, of course, Andrew, is that as long as the share market continues to hold around these levels, and there's some performance fees, then their managers, and therefore Pinnacle will achieve not only the underlying management fee, but some performance fees as well. Whereas if the share market does fall into a bit of a hole, then certainly anything that's equity focused, like these guys and girls, then they are going to come under some pressure. So as long as we're comfortable where the share markets are, then this is certainly a stronghold. And in fact, if it was to come under some pressure and they were to go back into sort of $12, $13 because the share market's tanked, this is one that you should have towards the top of your list in buying.
So you are buying it?
It's a hold.
Oh, it's a hold.
But
yeah,
it's a hold. But should the share market fall away, it's a buy.
Fair enough. That is a double hold then for Pinnacle Investment Management. Our stock of the day,